Hi and Assalamualaikum. My name is Sita binti Ishaq. My matric number is 2020897346 and I am from group D2 BA2495A. Okay, first we will go through the introduction. In March 2020, the World Health Organization (WHO) designated COVID-19 as the newest pandemic, and there is presently no vaccination or specific antiviral treatment for COVID-19 patients. Many infectious diseases have been identified throughout the years, and some of them have become worst nightmares when they spread outside a certain geographic area and finally become pandemic. The COVID-19 outbreak has affected the life of millions of individuals throughout the world as well as delayed the global economy, transportation and businesses. Several industries have been negatively impacted, including travel and tourism, leisure, transportation, manufacturing, oil and gas, retail, and the other more. Moreover, certain businesses such as consumer technology, e-commerce, and healthcare thrived during the pandemic because of strong demand from individuals. So, in this report, we will look at the long-term effect of the pandemic on the financial sector, notably the Islamic banking businesses. The banking sector is among those affected by the Malaysian government's hasty implementation of the Movement Control Order (MCO), which has put several economic sectors in danger. The Malaysian government issued a Movement Restrict Order (MCO) on March 18, 2020. As part of the measure to control the spread of COVID-19 illness. This long trip of MCO has put a lot of obstacles on the enterprise, such as limited client flow and a cash source for employee salaries and rental payment. Okay, next we'll go to the COVID-19 virus cases in Malaysia. As we know, the public health faced a serious danger in 2020, which is COVID-19 virus. In December 2019, Wuhan City in China province reported an outbreak of the new acute respiratory syndrome of coronavirus. This outbreak quickly expanded to other countries. The World Health Organization gave this a code designation of COVID-19 pandemic. From a Malaysian viewpoint, the COVID-19 outbreak was examined, as well as the management of the epidemic's mental health issues. The COVID-19 virus is yet unvaccinated and there is no known cure. To stop and slow the virus, fast preventative measures are therefore crucial. Next, the typical COVID-19 symptoms are fatigue, a dry cough, a fever, mild symptoms including headache, muscular soreness, a runny nose, a sore throat or diarrhea may appear in some infected people. Respiratory tract infection, such as kidney failure, severe pneumonia, and other conditions in certain COVID-19 individuals can be fatal. However, some affected people don't show any signs of illness or feel poorly at all. They are referred to as asymptomatic carriers. The elderly, young children, expectant women, people with chronic diseases like hypertension, diabetes, heart problems, kidney, as well as people with compromised immune systems like cancer patients, people living with HIV and smokers are the groups of people who are most at risk from COVID-19. As for the first incidence of COVID-19 was found in Malaysia on 25 January 2020 and was traced back to 3 Chinese nationals who had previously had a close contact with an infected individuals in Singapore. Moreover, the COVID-19 pandemic in Malaysia, which caused psychological stress during a pandemic like COVID-19, anybody might experience emotional effects. Everyone responds to stressful situations in a different way. Strong feelings in a person, such as stress and sadness, might be triggered by fear, concern, and anxiety about COVID-19. For example, a 62-year-old patient who was being investigated for COVID-19 committed himself in Selangor Sedang Hospital reportedly because of sadness. In-depth recommendation on mental health and psychosocial support in COVID-19 have been released by MOH. They included the mental health and psychological support services for people being investigated by COVID-19 as well as the responding medical personnel. Okay, next, we will look into the Islamic banking and finance in Malaysia. According to the Central Bank of Malaysia (BNM), there are 16 Islamic banks operating in Malaysia that are supervised by the BNM. Malaysia now has 3 indigenous full-fledged Islamic banks, 5 foreign-owned businesses, and 8 conventional banks with Islamic subsidiaries. Rapid liberalization in the Islamic finance industries, backed up by a welcoming business climate, has prompted global financial institutions to make Malaysia their preferred destination for conducting Islamic banking operations. Islamic banking, in general, refers to a banking system that follows Islamic law, often known as Sharia law. In contrast to the traditional banking system, the Islamic banking system is an interest-free institution, and any commercial transaction or trade activity including interest or riba, gambling or maisir, or speculative trading gharar is banned. The core principles that govern Islamic banking include mutual risk and profit sharing, the assurance of fairness for all, and the fact that transactions are based on an underlying commercial activities or asset. Apart from fostering equitability, profit and loss sharing among parties concerned, Islamic banking promotes zakat, prohibits monopoly, encourages collaboration for the benefit of society, and supports the growth of the halal components of business. Additionally, Islamic banks, same as conventional banks, provide a variety of financial services and products, but they must be in Sharia compliant. Since their inception in 1983, Malaysian Islamic Bank have grown fast. The Malaysian Islamic bank industry's funding has more than tripled over the last decade, reaching at 611 billion at the end of December 2019 and accounting for 35% of total loans. As a result, according to BNM Financial Sector Blueprint 2011 to 2020, the Islamic banking industry is widely projected to meet BNM Islamic financial objective of 40% of total loans by 2020. Significantly, the Malaysian Islamic banking business has grown in maturity, breadth, and complexity throughout time. Okay, for the next slide, we will refer to the effect of COVID-19 pandemic towards Islamic banking. The first issue that banks encounter is that they have difficulty selling their products and offering services to clients. COVID-19 is responsible for economic downturns and decreased GDP growth. This will reduce demand for banking goods. Besides that, during the MCO, banks must guarantee a social distancing measures and other standard operating procedures SOP. Therefore, bank branches must close temporarily or operate with a limited counter services and reduce operation hours. Okay, for example, during the MCO period, Maybank and Bank Islam operate only from 9:30 a.m. to 3 p.m. So individuals are reluctant to go to bank since the Malaysian government does not encourage residents to go outdoors during the outbreak of COVID-19. So customers who have no choice but to go to bank branches to apply for loans, they withdraw money from Amanah Saham Bumiputra ISB, or withdraw money from checks, or withdraw their money from Bantuan Perhatian Nasional PPN, may not be able to get services due to the limited operating hours, and customers must follow SOP. Furthermore, banks did not previously make loan application available for online. So, during MCO, banks face challenges in reaching out to clients and providing product and services. Okay, the second concern is as the result of unexpected difficulty, Bank Negara Malaysia BNM has aggressively slashed interest rates, affecting the bank's interest revenue. Lowering interest rates may benefit borrowers, but it has the reverse effects for banks. Banks will lose deposits if interest rates are low because a low interest rate do not entice individuals to put their money in bank savings accounts. Aside from that, BNM declared that all individuals and small medium companies SMEs borrower who match the requirement would receive automatic loan deferral for 6 months, reducing their burden on loan repayment during this tough period. Because of the borrowers are required to repay the interest or principals of the loan on the precise date that was previously agreed upon before MCO, banks may have a significant risk of suffering from credit risk, counterparty risk, and liquidity issues. So, banks are left with no money left over to cover their expenses as a result. Besides, during the COVID-19 pandemic, these two problems might cause a decline in bank income and profitability. Okay, the third issue that banks confront is the promotion of bank brands. In this situation, banks have traditionally promoted items such as credit cards, bank loans, investment, and insurance through billboard advertising along highways, in newspaper, or through printed pamphlets, banners, and flyers. These sorts of promotions are no longer effective during MCO since the government maintains restrictions that require Malaysian citizens to stay at home and prohibit cross-state travel. Thus, people seldom venture out. As a result, traditional methods of advertising cannot successfully assist banks contact their consumers. The last issue that bank faces is one of location distribution channel. According to S. Zanajay et al. 2013, place encompasses all actions through which banks deliver products and services to customers. During MCO, the physical location where banks operate and provide services at bank branches did not function well in comparison to the past. So, the government's restriction on transportation and large assembly results in poor engagement between banks and their consumers. Okay, next, we will look into the initiative planned by the government in developing financial institutions during the endemic. As the coronavirus COVID-19 outbreak begins, governments and emergency services are concentrating on urgent requirements such as increasing hospitality capacity, managing hunger, and safeguarding businesses and families from eviction and bankruptcy. The majority of funds flowing so far from the World Bank, the IMF, the other regional development banks, or central banks seek to provide funds for hospital protection equipment, stabilize financial institutions, pay companies to provide goods and services to essential workers, or provide direct cash support to households. Since the outbreak, the Malaysian government has aided the people by implementing a stimulus program. The economic stimulus package assists households by distributing cash throughout the Bantuan Perhatian Nasional program. Furthermore, in order to alleviate the burden on the affected community, the government and BNM collaborated to provide an emergency relief program as well as various sorts of assistance. In terms of Malaysian economic recovery, the Malaysian government has released the Perhatian Economic Stimulus Package worth RM250 billion. This package also highlighted the bank's attempt to give financial aids to firms or individuals, such as emergency loans to help SMEs, as well as flexibility for current loan repayment, as well as lowering the overnight policy rate OPR. In Malaysia, the government's regulatory and supervisory action enacted during the pandemic impacted financial institutions, notably the banking industries, in terms of loan growth, earning liquidity, and provision. Besides that, Malaysia became the first country to adopt a 6-month moratorium when the Prime Minister Tan Sri Muhyiddin Yassin announced the financial relief package in late March 2020. As a result, Malaysian banks automatically gave a 6-month delay on all loan repayments made by individuals and SMEs from 1 April 2020 until the end of September 2020, apart from credit card balance. During the moratorium periods, borrowers are not obligated to make monthly loan repayments to bank. The suspension was expected to bring relief to Islamic banks because it is benefit about 70% of Islamic banking sector's total funding. The goal of this project was to maintain money in homes and lessen the burden of individuals who were directly impacted by the pandemic. Besides, the Ministry of Finance reports that different special assistance programs, financing and credit options, facilities for corporate restructuring, and a 6-month moratorium on lending to corporations, small and medium-sized organizations, SMEs, and people have been made available. With the help given, SMEs may continue operating, safeguard their employees, and promote domestic investments based on the STAR 20 March 2020. Furthermore, restructuring and rescheduling from the standpoint of the banks can aid them in minimizing credit recovery efforts, reducing non-performing facility portfolios, and introducing quick write-back of specified provisions. Customers may find that restructuring and rescheduling can help them with cash flow, maintain the sustainability of their company, and perhaps prevent legal action. Okay, for the last part is conclusion. As a conclusion, the COVID-19 pandemic involves more than just an infectious illness. Government and societies must work together to prevent, treat, and end the viral transmission chain completely. The government took swift measures to address it by putting the MCO into place, which led to the forced suspension of economic operations that ultimately had an impact on the financial system. Due to the restriction imposed by the MCO, the economy slowed down, unemployment rose, and poverty levels in Malaysia and the other countries soared. The Malaysian government announced the Bantuan Prihatin Nasional Program, which provides money and other economic stimulating package to the impacted communities to lessen the burden on the society. Besides, the financial institutions in Malaysia responded to the monetary policy announcement of COVID-19 related measures with the same objective. The epidemic affected practically all economic sectors, with banking being a prominent industry in the country. Furthermore, several organizations expressed their concerns over the country's scenario. It has generated a sense of a common duty for society during a difficult period, as expressed by people, non-governmental organizations, NGOs, and companies such as financial institutions. Malaysia was hit by the third wave of COVID-19, leading in an increase in daily cases. Because of MCO massive socio-economic implications, the government is hesitant to adopt it at this time. The tourism sector and other business are concerned about the reintroduction of the mobility restriction, given the number of daily cases and economic consequence. Finally, the Malaysian Ministry of Health claims that unless everyone takes responsibility for paying awareness to the dedicated using the methods to reduce the transmission rate, it is impossible to end the change of the virus spread. This may including wearing masks, maintaining good hygiene habits, and engaging in social isolation. Given that certain social groups are reluctant to give up the habit of shaking hands or gathering places, and that there is still a lack of widespread understanding of the new standard, it is difficult for the nation to break the chain of infection.